Today, I'm going to show you the 5 things that a professional investor like myself who is competing in the 2026 US Investing Championship looks for when trading options. Now, this is not something that I just found magically or found on my own. No, I actually was taught this by a billion-dollar hedge fund manager. I'm going to walk you through it step by step by step. And I'm also going to show the exact trades that I have on right now that I'm competing with in the US Investing Championship. We're going to be rolling a couple of those trades today because they're doing so well. We need to make sure we're taking our partial profits, freeing up capital, and taking risk off the table right now. So if that sounds good to you, you're in the right place. Let's make it happen. I am joined by my friend and colleague, Joe, an Ovtlyr University graduate. We're going to make this happen today, Joe. Joe, you excited? You ready for this?
I'm very excited. It's been a great day. Let's see what the charts say.
Let's do this. Let's do this. Oh, look at this. This is the Ovtlyr Fund. We started at $50,000 for the year. We're now at $55,700. So that means Chris is up over 11, let's say 11.5% for the year so far in the US Investing Championship. We're 14 calendar days into the year. I would say that that's pretty good. I would say that's probably not normal to be up 11.5% in the first 14 days of the year. But let's talk about the 5 things that a professional investor would look for whenever he is looking to place trades. First thing that I want to see is liquidity. Okay. The very mostest importantest thing that I look for is liquidity. Why? Because if I can't get into a trade, Joe, then I can't get out of a trade, and then I'm stuck in a trade. The best example I could ever give you of why liquidity matters is there was a trade that I was, it was an earnings trade. It was an earnings iron condor. Don't ever think about doing iron condors, but this is the best example that I ever learned from. It was an earnings iron condor on AKMI, AKMI. And my trade was set up perfectly. I had the iron condor around the expected move, and volatility fell. In my trade, I don't remember what it was, but let's say that I was going to make $1 per contract, so $100 a contract, max. Volatility fell. I saw that profit come into there at like 70-ish%. I'm like, sweet, ready to take my trade off. Let's go. So I'm putting it at 70, not getting filled. Okay, putting it at 50, not getting filled. Putting it at 40, I'm not getting filled. And by this point, I'm like, I need to get filled. Why am I not getting filled? So I'm bumping it down to 30. Now remember, I should have been somewhere around 70-ish. I'm getting absolutely monkey hammered on the price to get out. And so I'm like, okay, fine. I'm just going to hit a market order. It'll be fine. It ended up being a loser. Like, market orders get you filled at the very next available price. So rather than my $70 win, I feel like it was like a $120 loss. It was a big loss compared to how much I could win, which is why you don't ever sell options, because it breaks the golden rule of leverage. But I was like, how in the wide world of sports did I take this loss? This should have worked. There is no reason why this trade should not have worked. The only reason why it didn't work, Joe, liquidity. There weren't enough people trading those strikes for me to get in and out. This is also really prevalent in the penny stock world. People be like, oh, you got to buy this penny stock, right? It probably happens a lot in crypto too, I would imagine. Oh, you got to buy this new meme coin, right? Spooge coin. Go buy Spooge coin. It's the next big thing. And then people buy it. And the next thing you know, you can't get out because nobody else is buying Spooge coin from you. A little Freudian slip right there. Spooge coin from you. So you got hosed, right? I don't want that to happen to you. Liquidity is paramount. All stocks are bad. That's right. On Chris's tombstone, all stocks are bad. Number one thing that a professional looks for is liquidity. If there's not liquidity, I'm not interested. Second, I look for the extrinsic value to be less than 30% of the price of the option. Now, why? The extrinsic value is your uncertainty value. The closer you get to expiration, the less extrinsic value will be. The further you get from expiration, the more extrinsic value there'll be. In fact, I have a slide for this, and it shows what that extrinsic value does. The closer in time to expiration, the extrinsic value winds out of the trade. Now, the extrinsic value encompasses not just theta, not just time decay, but also volatility, also anything that's not delta. We haven't got to the delta yet, but anything that's not the delta all goes into extrinsic value. because it's the uncertainty. We don't know where Vega or where volatility is going to be. We don't know how much time it's going to be. We don't know in theory how much interest rates are going to change between now and then. And so for me, I want to make sure that I'm paying as little of this as possible. Now, there are times where you'll have to pay a little bit more and a little bit less, because when you look to have leverage, there's no way you're going to get the option for just the intrinsic value. Now, the intrinsic value is just a calculation between the current price and the strike price that you're looking at. Now, I am in the MP 60 calls. So I'm in this strike right here. Now, it has $9.63 in the money, but you can't buy it for that. You can only buy it for $10.95. So that difference is the extrinsic value. Okay. Now, when I'm looking at this and I see this is roughly less than 10%, that's great. But down here, the extrinsic value peaks right at the money because that's the most uncertainty. So I'm looking to pay as little in my extrinsic value as possible. Next, what would a professional investor look for when he's looking at options? That would be, if you could find the right slide, professional YouTuber at work here. Here's my slide. There it is. Okay. We talked about okay. Liquidity. For liquidity's sake, I want to see at least 250 on open interest. The rule of thumb, Joe, that I ever heard or always followed was you want at least 4 to 6 times what you are paying or how many you're buying in open interest. So for example, if you're buying 5 contracts and you see open interest of 22, you know what? There's actually enough liquidity to take care of you there. If you're buying 500 contracts and you see 22, we got a problem here. You are the market. Okay. Mm-hmm. You are the market at that point. So the rule of thumb is 5 to 6 times. Now, one thing we have found is that we have not run into a spot, even with all the outliers jumping in with us, where we've not had enough liquidity, which is really interesting, right? This may be an outdated rule. Joe and I were actually talking about that just a little bit ago. It may be an outdated rule because market makers can make these make the liquidity for you. But that's the rule of thumb I want you to know. Now, we talked about the extrinsic value, and let's talk about the bid and ask spread. Now, this is something that I was watching just a little bit ago because we're going to roll MP. MP is up over 9% today, up nearly 10% today, Joe. Wow. When a big move like this happens, you can have a very liquid option with very wide spreads. Because that movement, that excitement around this stock will expand bigly the bid and ask spread. Now, this has come in a little bit. I've already rolled in my family account. We're going to do so here in just a couple minutes in the Outlier Fund. But this is the strike I rolled to from the 60 to the 63. And at one point, it was over $1, not even an hour ago. Now it's down to about 40 cents. Okay. And you can see just right now, it's starting to widen out a bit as well. Right. Anytime excitement comes into the market, it's going to expand. Brandon has a great idea. We should launch Scrooge Coin. That's way better than Spooge Coin. Okay, Brandon, because you brought this up, Chris got a brand new watch today. I got a brand new watch today. You brought it up. I didn't bring it up. Chris is an avid watch collector. I found this on eBay, and I have been eyeballing one just like this for a while, and I was so stoked about that. This is a Scrooge McDuck watch from 1992. And it says time is money, and it almost looks like a gold coin inside. It won't focus inside of the watch. So yeah, thanks a lot. There's your Scrooge coin watch of the day. I've already mounted it as a watch. There you go.
Very cool, Chris. That's neat.
I know. I'm a real nerd. The watches are my jam, but Mahesh doesn't like me to show them off. I too love watches. Have you ever heard of Rado? I don't know if I've heard of Rado. I don't know. Maybe. That's also why we've sponsored 2 watch podcasts so far. Okay, so we talked about that. Let's continue on. We talked about extrinsic value. We talked about the bid and ask spread. I want to see it less than 50 cents. The reason being that I say 50 cents is it's a nice round number. I'm sure you could come up with some sort of formula to say, if it's more than 10% or 1% of the stock price, then, maybe I'm not interested. And maybe that's a good rule of thumb, right? If this is 1% of the stock price, then if this is less than 1%, like less than 70 cents or 10 basis points of that or whatever, you know what? Maybe that works for you. Maybe that works for you. I like a nice, easy to remember rule of thumb. Nice, easy to remember rule of thumb. And the reason being is, let's conceptualize this. If I bought this for $8.65 and then I had to sell it back immediately at $8.25. Now this is going to change while we're talking here. You can see it's coming in, but we need to just be deal with what we got here. 865 minus 825. That's 40 cents that I give up between buying it and selling it. I don't like giving up anything, but if I have to give up 40 cents, what is that worth to me? Divided by 865, where we bought it from. That's a 4.5%, 5% haircut on your option for nothing other than the privilege of buying and selling.
That hurts.
It does hurt. So we want to make that as tight as possible. Now, it's an unavoidable thing. It's an unavoidable thing in trading. You have to pay the bid and ask spread, but you want to pay as little as possible. And so we talked about open interest. We talked about the bid ask spread. We talked about extrinsic value. Let's talk about expiration. Now, for you, I don't know what your backtested proven data proven plan looks like, but mine, I actually have data to back it up. I actually have all the data that I could ever want on my backtesting. Now, looking at this chart right here, I can see the average days held across all sectors on my particular plan is roughly 17 days. So, Joe, I don't have to go out 170 days because that would cost a lot more. We're paying a lot more extrinsic value. I like to go for 21 days. Now, that also means that I'll be pushing close to expiration if I held it for 21 days or 17 out of 21 days. That's a thing. But I can always roll out in time if I need to. So this gives me some flexibility. I like to start at 21 days. So in February, right here is 23 days. I can look over here and I don't see a lot of liquidity. This one has some interest for me right here. But I could go to January, a lot more liquidity, that's for sure. I go to February 13th, still a little bit less. You know what? Rather than going for this one now, I can take this one. It's going to have plenty of liquidity that I want, and it fits roughly in my trading window, right? Because you don't need to buy. Joe, imagine with me for a moment. Let's say that Joe bought a new Tesla. Joe, you like that Tesla, right? That Tesla's so much fun, right?
Mm-hmm.
Now imagine, Joe, you're only planning to keep that Tesla for like, I don't know, 17 days, and then you're going to get rid of it.
Yeah.
Right? Do you need to buy a 6-month insurance policy on that?
Nope.
No. So what about like a 30-day insurance policy?
I mean, maybe I could consider it. Depends on what the cost is, right? I'm not going to put a bunch of money into it, but
Yeah. I mean, if that's the only thing available, liquidity, if that's the only thing available, you know what? I'll go for that 30-day.
Mm-hmm.
But if I know that I'm getting out of this car, this Tesla in 17 days, I'll get an 18-day insurance contract because I don't want to spend any extra than I need to.
Mm-hmm. There you go.
Right? Same thing on your selection of strikes. If you know that you have a backtested, now granted, that's with the assumption you have a backtested plan, and on average it's 64 days. Well, hey, you know what? This 65-day one works perfect. But you really wouldn't want to go for a 16-day one because now you're going to have to do a lot of work to get up to that 65-day. All right. So you could go with the 93-day for sure, because that achieves what you're looking for right here. So that would be the fourth thing that I look for. Now, the fifth thing that a professional investor looks for when he looks to trade options is knowing where his delta is. Now, delta is the amount the options price will change for every $1 change in the underlying stock. So for example, this is 85 delta, meaning as MP goes up $1, this option will go up 85 cents. If this option goes up 85 cents, that's great, right? I'm never going to get a 1-for-1 because that's not possible with trading options unless you go like all the way in the money. And basically at that point, you're just paying for long stock. But if I'm going and I know my numbers always come out to be roughly 80 delta, then when I go to any options chain on any stock, I can just zoom in over to the 80 delta and be like, oh, you know what? Let me start here. I don't have to go out of the money and be like, oh, well, what if I do this? Let me calculate every extrinsic value. Let me look for open interest. No. By knowing your numbers, by knowing the delta you want to look at, Joe, give me any random stock. Go.
Tesla.
Okay, cool. Let's go to Tesla. Let's go to 23 days to expiration. Let's start around the 80 delta. Look at that. 321, 740 on $48 is way less than 30%. That is one expensive ass option. And I already know that if this was less than 50 cents wide and it fit my trading plan, I'm in like Flynn. I don't have to do all this extra work because I know where I'm going to trade at. It might be a little more, it might be a little less, right? And so we need to keep that in the ballpark. But if I know where I'm going, Boom, just like that, I can show up and I can make the trade. So that is the 5 things. Those are the 5 things that a professional investor looks for when he goes to trade options. Now, Joe, are you excited? We need to roll a couple options here, take a look at our trading plan for the day, and see everything that we need to do, right? Because this is what we're doing in the US Investing Championship. These are live trades that we're going to make right now. How's that sound, Joe?
That sounds great. Yeah, thanks for the explanation on those 5.
Hey, was that useful? Type a 1 in the chat if that was useful. If it wasn't, I get it. Trust me, I've beaten the dead horse with this, but new people are going to watch this all the time. My objective is to make everybody an outlier. Let's be very honest here. If your life is better because of being an outlier, you got to let me know down in the chat below. That'll help other people. Okay. So let's keep going. Let's keep going. Joe, let's do this. Let's introduce the Outlier Trading Room US Investing Championship invitation only live stream. This is where we help you save time, make money, and start winning with less risk. So you should probably subscribe if you haven't already, because every single trade that I take in the US Investing Championship will be done on this channel live, exactly like we're doing right now. So we have 3 plans that we're running this year. There's Plan M, which is our most aggressive, Plan M for money. Literally, that's why it's called that. Plan ETF, which is our defensive plan. And then there's Plan Sit in Cash and don't F up your portfolio when nothing else is working. And listen, if you want normal returns, go somewhere else. If you want outlier returns, you're in the right place. Now, when do we use these? Plan M is our most profitable plan, and this is what we're looking at right now. Plan ETF is where you go if Plan M is not set up. And then if both of these are not set up, you don't want to F up your portfolio. Plan Sit in Cash and don't F up, okay? But you don't have to sit in like cash. We have a trading vehicle called SGov that allows us to trade and make about, well, not really trade, you just sit in that and make about 4.3% doing absolutely nothing, which is so cool. Man, if I had known that, Joe, I'd have an extra 0 on my account. I only learned about that May last year. So thanks to Dave for that, by the way.
Earning a little is better than earning nothing.
Or putting your money at risk. Right, earning a little is way better than risking a 17% down move in the market. I'll gladly earn a little while that's happening.
Yeah, for real, absolutely. Yeah, you got to listen to the market. If the market's not telling you it's going to go in the direction you want, just don't get in it. Earn your 4% interest on treasury bonds.
Exactly. Hey, Black Ice says squish the like button. I'm not telling you what to do. It. Black Ice is telling you squish the like button. We need to look to reduce risk before adding new trades. Why? Because we want to always look to reduce risk. As professional investors, we need to take the opportunity to say, we need to get out of the market as fast as we possibly can. All stocks are bad. Every once in a while, they act right. So we're going to look to reduce risk as fast as we possibly can. So we need to review our active trade exit signals, because the most important part of the plan is planning on a plan, not going to plan. So first, we do have a little bit of money in Plan ETF. Now, how much do we have in there? Let's go to our portfolio. We've got 28 shares of SPXL, which looks like it's that blue. I was looking for like a percentage. Do we have percentage? I was just curious. We have about $6,000 in SPXL right now in the Outlier Fund, which is using Plan ETF. Now, these are the reasons to get out of Plan ETF, a SPY sell signal in Outlier. Let's pop into Outlier and take a look over here. SPY right there. The SPY has a buy signal today. Okay, so that's not a sell signal. A 30-day-old order block getting hit. Well, the SPY got pretty monkey hammered earlier today, but it's recovered quite well. But there's no order blocks in its way to worry about, so we're good there. A 10-20 bearish cross. Not today, my friend. Not today. Will it happen someday? Absolutely. Could it happen literally months from now? Yeah. I mean, Joe, what's really cool about Plan ETF is we have back tested the results. There have been some of the back testing results where you don't have to do anything for like 90 days. Like it can just run, okay, without getting any sort of exit signal.
That's the definition of effortless, stress-free trading right there.
Exactly. Effortless trading. And then a SPY closing 3 ATRs above the 20 EMA. You can actually make your charts look exactly the same as mine. Over in the Discord, we have free indicators that you can use, like this one right here, the value zone. And once SPY crosses over 3 ATRs, that's way up here around 705, that is 3 ATRs above the 20 EMA. And right now, it is inside the value zone, So actually, the rule is in this trade, this plan here, is that if everything still sets up, you can take the trade at any point. In fact, let me drop off chat so you can see that. You can take the trade at any point. This is active and in the value zone. So in theory, you could get in today. We have an uptrend in SPY.
That's important for a lot of the newer folks because they may not have set up with their broker that they could trade options. However, they may be able to trade ETFs and follow their version of Plan ETF.
That's right. Yeah. Now this is everything right here is set up for an entry in Plan ETF, not an exit. So you do you. I'm not telling you what to do. However, I don't have any exit reasons to get into Plan or get out of Plan ETF. So I'm going to continue to hold those shares of SPXL until I have a reason not to. Now, I have been selling off my SPXL. In fact, in the description down below, you're going to see this exact portfolio tracker. This exact portfolio tracker right there is down below. Alpha class lesson 2 at 1 hour and 18 minutes for the SGov aha moment. Well, how about that? How about that? It was documented the moment I was like, what? I can get into SGov? Thanks a lot. Very cool. Who said that, by the way? Cody. Cody, gold star of the day for being such a nerd to know that. Gold star of the day goes to you, my friend. Okay, so I have been taking trades out of SPXL. Now I got into SPXL with 221 shares at 226.22. I have seen several people asking, how do I keep track of getting out? This is what's called taking a weighted average. So let's mark this to market right now and you'll see. I still have 28 of the 221 shares I originally put on. The current price of SPXL is 227.25. That's not it. Let's go over here, 227.25. So I come over here and I can say, okay, 227.25, 227.25. Cool. Now I sold off 115 at 230.70. I sold off another 30 at 230.35, another 48 at 231.03. When you do this, this is going to create a weighted average, and it's weighting it by the number of shares that you have left at each of those points. This is deep finance bro theory, just so you know. If this does not make sense to you, it's okay. I've actually worked in the finance world for like 17 years, Joe. Right? I didn't just show up one day on YouTube and be like, man, I think I'm going to sell a $10,000 course and see how many bozos will buy it. No, that's not how we do it around here. We're actually professionals. So the current average price that I have sold out of yet still remain in 28 shares is at 230.29, which is an $898 gain on this $50,000 account. So let's continue on for our Plan M exit signals. Now, I have made all of these favorites of mine inside of Ovtlyr, and we can see nothing has a sell signal except for SoFi, the greatest stock in the history of time right there. So I don't have to do anything with my trades. And don't worry, I'll show you exactly how I keep track of rolls because we're about to do some rolling. Joe, we're about to do some rolling.
Let's go.
1020 bearish cross on any of our stocks. Let's take a look real quick. 1020 bearish cross, Ovtlyr blocks, earnings, or any gap and craps. No gap and craps happened. Nothing happened down here. So really all we're looking for is 1020 cross or Ovtlyr blocks. So if we go over here, KGC, 1020 is not in our way. No Ovtlyr blocks. PPTA, nothing in our way. We do have a little bit of movement up here. Maybe be able to do something. How about NEM? No. Okay, that looks good. MP, oh my good gravy. This is up almost 9% right now. I'm going to mark this one blue too. You'll see why in just a minute. OR is looking fine as well. This did have an order block and I bought it at the top of a close over the order block. This is going to end today. Well, actually ended yesterday. I don't know why it's pulling out just like that. But anyways, this order block is done and that's exactly what I'm looking for. And then Ego has an order block right on top of it, but it's not there yet. Now, for my trading rules, I need 2% up to this order block. Let's talk about what an order block is, okay? This is probably going to be a great representation because you got to go way back, way back. Oh my good gravy. Joe, do you remember what you were doing in August of 2013?
No, not a chance.
Dude, that was when, actually August of 2013, I just got my CMA. And I had just left the insurance company that I was working at in FP&A in Irving, Texas, Union Standard Insurance Company. And I started to work for a consulting firm. Well, it's actually a consulting branch inside of a credit union. Because like I said, I am a finance bro. I worked at Catalyst Corporate Federal Credit Union. in the consulting department of that called Catalyst Strategic Solutions. And what I would do is I would go and meet with 40 to 50 credit unions every single quarter. You're not going to believe this, Joe. I would show them ways that they could make more money with less risk. Oh my gosh, this guy knows what he's talking about. He's not full of crap like every other YouTuber. Yeah, it's the truth. So that's actually when I started that job. But there was somebody who purchased Ego at that point. And what happened after that is, man, it went down and it went down and down and down. How far down did it go? Let's see. Let's see how far it went down. Let's see. Oh, geez, 40-ish%. That would hurt, right? That hurt a lot. So imagine that investor's surprise. Let's say there's a little investor named Fat Daddy. Let's say Fat Daddy bought in August of 2013. And then he didn't tell his wife what happened, but he finally saw the price go back up in August of 2014. Fat Daddy's telling his skinny wife, his skinny, beautiful wife. He's like, listen, babe, I didn't screw up this time. I actually got out at break even. And she's like, sweet. That's why I love you, Mr. Fat Daddy. You're the best. You're the best. But he didn't tell her how he went down 40%. That is the trading psychology of why order blocks work. It's because they became long-term investors, right? Fat Daddy was probably like, here we go. Here's some fat profits coming through. I'm going to buy my skinny, beautiful wife a new Escalade. Oh, shit.
Oh, shit.
And then it goes sideways for over a year. Finally, the very first time it came up to there, Fat Daddy sold out as fast as his fat little fingers could do it. And then what happened after that, Joe?
The fall.
Not just the fall, but the monkey hammer. And it just so happened to have a monkey waiting around the corner. Just so happened. Very random, coincidental spot on the chart. The very first time it came right back up into here, what happened? Everybody, along with Fat Daddy, sold as fast as their fat little fingers could. There you go. That is the psychology to why order blocks work. Don't tell me they don't work, because I just showed you right there that it absolutely works. Now, can it go through order blocks? Absolutely. But you got to think about the buyers have to overwhelm the sellers at that point. And those sellers may have been there since 2013. And we just came up to that area right now. Joe, I don't know. Fat Daddy may still be holding on that stock. He's down in New Orleans. He's like, I'm a Fat Daddy. I'm in New Orleans. I'm going to go party at Mardi Gras once we get this back up here. Right? I don't know. He's going to do what he's going to do. He's at least laughing. So I appreciate that. And the moment that he sees when he's getting ready for Mardi Gras, oh, I'm back at break even. Get me out of here.
Yeah.
What's going to happen? I'm not going to wait around and find out. So if it does crash into that order block right here, Chris has an emergency exit plan, And that looks like this. This is the only time, other than a stop loss, that Chris will trade intraday. If it runs up into an order block and then keeps running all day, I'll hold that dude. But if it closes inside the order block, it will be closed out of my account. If it closes on top of the order block, I'll hold it. But if it runs up into the order block and then comes back down, gets rejected, which totally could happen. I'm not going to predict the future. I don't know what the future is. And any YouTube joker that's telling you they know exactly the $75 and what? Did you see my post yesterday, Joe? I nearly blew a gasket on Discord yesterday.
Yeah, I did notice.
Invest with Corey said $75 and these 3 stocks will surpass your full-time income. Corey, there's a bridge. Go jump off of it, okay? You're not helping anybody out here, you big old scam artist, you. So looking at this, I'm not going to predict the future. If it goes up and closes above, great. If it goes up, gets rejected, that's great too. All I have to do is follow my plan. So I have set an alert on here. It did not hit that today. There was some rumoring that it hit at pre-market, and that's fine. I don't care what pre-market does. If it's not part of this wick right here, I'm not paying attention to it. Just full stop, period, full stop. I don't care. If it's not part of this wick, I'm not interested, because how could I ever measure this if it's never recorded? So with that being said, Ego does have an order block we are paying attention to, and we do have alert going on right there. Now, Joe, we talked about a couple that have looked amazing today, like PPTA and MP. They are actually above the places where I would look to roll. Now, the reason we roll is, let me show my slides for this. It's like I'm a professional. I have a slide deck for this and everything. I'm not just making up stuff out my backside. Okay. So we roll at the first ATR. The reason we roll as fast as we possibly can is because on average, even the down moves, even though it's stocks that end up being losers, go up at least half an ATR, which is cool. Now, we don't know what's going to happen with these, but these are high conviction trades. And so because of that, I'm going to treat them differently. No. You don't get to pick which trades are high conviction or not. Remember, all stocks are bad. Every once in a while, they act right. Even a stock that is acting right today could turn around and work against you. So we're going to do what Magnum PI is saying, and we're going to reduce risk at the half ATR first, and then every ATR above that point. Take capital off the table. We're going to have some partial profits. Let's see. Let's find that slide. So at the half ATR and then every ATR after that point measured from the original entry. If the stock moves in your direction, can you roll up and or out for a credit if needed? No, then you hold on to the trade, is what it is. But if yes, as one order, and we're going to do this together so you can see what it looks like, selling to close the original position, buying to open closer to the money with the same number of contracts, but it must hit the same liquidity standards as we started off the video with. Okay. Oh, look at that. We're tying it all together. Now, why do this? It takes partial profits now. It frees up capital now. And it keeps the trade alive. Somebody posted in the Discord earlier, if you can't roll, you can always just close some of the contracts. But if you do, that changes the dynamic of the trade. If I had 10 contracts, each at 80 delta, that means I'd have 800 deltas, okay? If I decide I'm gonna close 30% of those because it's gone up one ATR, instead of letting the trade work for me, I've now hit it off at the knees, and I only have 700 or whatever, the 10 times 80. Now I'd have 70 times 80 is, I don't know, math is hard. We'd have a 30% less deltas working for us. And because of that, that's not going to help. That's actually going to work against us. Okay. Now, of course, we're going to keep the same planned exit points. 506. I knew what it was. I just want to see if Tyler would do the math for me. I mean, you know, that was the plan all along, Tyler. Tyler just stepped in and just made sure to take care of me. I appreciate that. I appreciate. Oh, look at that. You Drum Dave has made up all the money he lost with Corey with Outlier. Huh. It's almost like because A, Outlier works, B, we're professionals, and C, we have a team of over 20 PhDs, rocket scientists, actuaries, math nerds with one goal: help you save time, make money, and start winning with less risk. All right, Trav.
And you get to learn how to trade, not just be shown which stocks to go pick.
That's right. We're not just giving it to you. I'm showing you everything you're going to need. Because, Joe, I mentioned this yesterday in the Discord, and I don't think people understand. I'm going to disappear one day. That is my goal, okay? I'm going to teach you how to fish, and then I'm going to bounce. That way I can take care of this without having to be the dancing monkey, okay? I'm just saying.
All right, after you leave, I'll continue to teach for a little bit longer, but I'll be leaving soon after that.
Well, actually, what I'll be doing is trading the Outlier hedge fund in the background, so I don't have to do this. I'm just saying. I love trading. I love the game of trading. Anyways, let's go do some rolling. Okay, let's start with PPTA. Now, it's up half an ATR, almost at one ATR. Let's see how we can do rolling PPTA. So this is the live trades inside of the Outlier Fund. We're in the 22.5s on February 20th on PPTA. Let's go to PPTA. I will tell you one thing, Joe. I don't like that Tradier doesn't like highlight which strike you're in. Every other broker I've ever used actually shows that. So we gotta just make sure that we're in the right spot. So rolling out, I mean, we can actually climb over here and then roll, which is fine, but it still doesn't light up on here like I want to. Joe and I are going to disappear for a while so you can see everything. Full transparency. This is crazy, Joe. I've never seen a YouTuber do that. Okay, so we're in the 22.5s. I want to roll closer to the money, which gives me the option of the 25s or the 30 strike. Now, the 25s have 2,500 on open interest. That's great. 50 cents on 790. That's way less than 30%. And 760 and 790 is a 30-cent split. But I don't want to roll out in time. I just want to keep the same time. So then we're going to roll from the 22.5 to the 25s. And as one order, sell to close the 22.5s and buy to open the 25s. Make sure I got the right number of contracts. Yes. And we're going to start at a limit price of 220. Let's say if you get filled. I have no idea if we'll get filled. So we'll hit that to send. Now, this for some brokers will show as a vertical spread. Doesn't matter. Look, see a highlight. It should do that all the time. When I'm looking at my portfolio in the chain, I want to be able to see it like that. Now, let's go over to orders. We're not filled yet. There probably is a setting. You're right. We're not filled yet, Joe. That's okay. Just nickel it down and hit replace. And we're filled instantly like that at the average price of 215. So Joe, do me a favor and post this up on our Discord when you get a chance. We rolled from the 22.5 in February to the 25 still in February for a price of 215. For a price of 215. Same quantity. We rolled it for 215. Now that means that we originally purchased it for actually, let's go in the Discord because I have no idea what I purchased it for. And I can't go back now and look, can I? Oh, no. I can look at the orders from yesterday, right? Look at the orders from yesterday. Orders, filter, yesterday. Today's the 14th. Let's go to the 13th. Okay, apply. Okay, no, got to go a day before that. 12th, apply. There it is, PPTA. We got filled at 870. So I just took.
Well, your limit price was 870, but you paid 865, I think, right?
Oh, you're right. 865. But in a nutshell, I've taken 25% of the risk off the table. 25% of the risk of this is gone, and I still have the entire trade on. Pretty cool, right, Joe?
Mm-hmm.
All right, so we are rolled PPTA roughly right here. Now MP. Huge move up today. Big, beautiful move right there. Let's see if we can do something similar for MP going into the portfolio. We own the MP 60s. Let's hit the roll button. It lights it up down here, which is handy. Let's go to the options grid, but it doesn't change this over here. I have feedbacks. I have feedbacks on how we can make this better. I don't know if they'll listen to me, but I have feedbacks. Okay. I don't want the 60 strike anymore, and I want to keep the same expiration. So still in January. Where could I roll to? Okay, so the 61, 188, the 62, 151, the 63 has 411. Okay, that's cool. I will tell you one thing. This spread has widened out bigly. Now it's coming in. The reason this is widening out and then coming back in like it is now at 50 cents, is because of the excitement around this stock, up nearly 9% right now. They widen out spreads when things like this happen. That's a great thing. That is actually a great position you're in. Now that it's 50 cents wide, I'm comfortable with taking the 63s. If it weren't, I'd wait a minute and then do it. So we're going to roll to the 63 as one order, closing the 60. So sell to close, buy to open. Remember, I already own the 60s. I'm just moving from A to B. A to B is all I'm doing right here. Now, limit price shows 218. Let's see if we can get filled there. Yes, it was filled at 218. So if we go to our portfolio here, you'll still see PPTA. You'll still see MP. You'll see we're up a couple dollars on them already. That's great. And what was our MP cost? How much did we pay for MP? Let's go to the
715.
Paid 715 for MP.
Mm-hmm.
And I just rolled it for 218. Okay. 218 divided by 715 means I've taken 30% partial profits right now. That's actually what that means. 30% partial profits are now in my account. So that means, Joe, if I go over to my account view, I have more cash. Nice. I had $300 in cash. Now I have $4,000 in cash. Oh, pretty cool, right? Pretty cool.
Yeah, very cool.
Joe, if I remember correctly, I don't have to get out of SPXL. But actually, I could use a point right now to get back into SPXL because look at it's like the whole plan is coming together. Oh my gosh. Maybe I should take that $4,000 and do something with it. So it's not just sitting in cash. And I'm going to go buy some SPXL. How's that sound?
There you go. Let's do it.
I'm going to go buy some SPXL. I got monies. What am I going to do with it? I don't know. $4,011. Now, this is where math is not so hard. And it's currently trading at 226.37. I'm up six, a couple dollars of SPXL based on the 28 shares I had left. I wonder how many I can buy now. So divided by 226.65 means I can get another 17 shares. By George, I'm going to go buy some SPXL right now. I'm going to go buy some SPXL right at this very moment. SPXL. And I'm going to buy 17 shares of SPXL. Now, you don't want the option chain over here. So you come down here. Joe and I are going to drop off. I'm going to turn off chat to... Oh, we've already turned off chat a while ago. Okay. No offense, but we got to be able to see what's going on down here. I don't want MP. I want SPXL. SPXL. Now, this is lit up, and I want equity. I want 17 or 14? 17 shares. 17. I'm going to buy at the market price, Joe, because it's super liquid. I don't have to worry about getting hosed like we talked about earlier. Hit the buy button. I bought 17XL at 226.84. If I go to my portfolio now, my account view, I still have $4,000 in cash. There it goes. 155. It need a second to update. $155 in cash. Chris doesn't like to go negative. I don't ever want to be on margin. Not a thing that I do. So I always want to have some sort, even if it's a penny, that's fine with me. I don't want to ever go to a margin point. So I now have 45 shares of XPXL still, and we're going to let that run. Now, Joe, this is the not so fun part of trading. We need to document our trades. Why do we document our trades? So we know what we're doing, right? Because there's going to be a point in time, months from now, where I can come back and I can say, hey, Joe, remember when I did this or that and the other? You're going to be like, no, not really, Chris. I drank a whole lot of Guinness between now and then. I'll be like, I get it, Joe. But good thing I wrote this down. Good thing I wrote this down. Okay. So SPXL, we just picked up a handful more. Now, remember, we had 221 here. What we're going to do, we're going to get real sly. We're going to do equals 221 times 226.22. Okay. Then we're going to say 221 divided by, you know what? I'll figure that out later. I don't want to jack this up. I don't want to jack this up in the live stream. By the way, if you ever want to see this down below, what I need to do is a weighted average on this, but I also just realized that if I do the weighted average there, I need to make sure it balances out here. And that's going to take too long for me to do on the live stream. But we just rolled a couple, and this question has been asked for months, Joe. Chris, how do you keep track of rolls? Actually, really easy. It's actually super duper easy. So we roll PPTA for what price? If we go over to orders, we'll see we roll PPTA for $2.15. Okay, so we start there. $2.15 equals 215. All right. But that's not what the value is worth right now. The value right now of PPTA is what we rolled for plus what it's worth right at this exact moment, which is 770. So we do 215 plus 770. That is the actual value of our trade right now. Now, one thing I like to do just to keep track is I'll mark it blue. That way I know, hey, I've already rolled this trade. This is looking great. I love it. I'm very happy. Let's do MP as well. MP, we rolled for. MP, we rolled on orders. We rolled for $2.18. And MP's current value at 63 is 810. Okay, so 218 plus, right? Yes, 218 plus 819. There we go. 819. That's what I paid for. No. Value is current market price. Okay, 807. 218 plus 807 equals 218 plus 807, 1,025. And the original trade was 715. So if we come over here, we can see MP is up 43% and PPTA is up around 13%. Not too shabby. Not too shabby at all. Now let's go mark these to market. Let's go mark them to market real quick, Joe. Like I say, I'll work on SPXL a little bit. I don't want to screw that up. KGC current value is on KGC 373. So let's update this. We already did that one. Let's do NEM 1035. And we already did that one. Let's do Ego at 730. And OR at also 730. Now you'll notice, I think every single one of these was less than it was yesterday. That's okay. That's part of the game. Is what it is, right? We don't get to only pick the winners. Oh, wow. That looks pretty damn good, Joe.
Yeah. If it plays out like that, I might retire tomorrow.
Not bad. 8 trades on for the year, 9.3% year-to-date return, and we can validify that by going to account view. That's about 9% on $50,000. Look at that. Look at that.
Very
Not
cool.
too shabby. And we can come over here and actually see how it's playing out, right? Plan M, about $3,700 of that. Average win. We do have an average loss right here. So the expectancy on Plan M so far of the 6 trades we've taken is 11.72. That's monster numbers. That's monster numbers. Now, granted, these are not closed yet. This will change. Because it will change, we can't really put our eggs in one basket. We can't count our chickens before they hatched, all those phrases, right? Plan ETF. This is going to change just a little bit. I just want to make sure that I get it correct. And once I get it correct, you'll be able to see it down below in the description. So, Joe, this has been a big day. I showed you all the cool stuff that a professional would look for in the options chain. I rolled a couple trades. I'm up close to 10% on the year so far, looking awesome for the US Investing Championship as planned. Now, I am going to be traveling over the next 2 days, but I am taking my laptop with me. We will be doing the invitation only live streams, but I don't know what time they'll be. I'll ping you on Discord to let you know when they are. If I make any trades, I'll ping you on Discord from my phone. But I'm not going to let anything slide. Okay. If my wife needs to drive while Chris gets in the passenger seat and puts on the hotspot to make sure he gets a new trade, it's going to happen that way. All right. So, Joe, I saw that there were several questions come through. Let's answer as many as we can. How's that sound?
Sounds good.
All right. Light them up. Let's go.
All right. Here's a really good one. That's not really a question.
How are you liking a green day on a market is red? The market was red. I didn't even know the market was red. Hey, you have a dollar strike increment on MP when Schwab is $5. Ooh, okay. Are you sure that you're in the right expiration? That's where I'd start. That's where I would start. Let's go to MP. It's dollars there. 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 Potentially, Paul, one of our alpha students. Potentially that's a setting. There may be a setting that says, show all strikes or only $5 increments, because there is also settings to show all expirations, not just monthly expirations. That could be a setting. Take a look at that. I cannot confirm or deny. I can only see what I can see right here, my friend. Okay, Inkari, why would I not be able to roll if I bought Riot? I don't know. I bought one 15 call in January 23rd for $1.99. I'm up 6% today, but can't find a trade that gives good extrinsic or that gives credit for a roll. I don't know. Let's take a look at it. What was it? Riot. Okay. Riot, January 23rd, 15s. All right. So Inkari is trying to roll from here to, I don't know, let's say here, for example. I don't know why you wouldn't be able to do that, right? I see 44 cents on 190. So 44 divided by 190, 23%. I see lots of open interest. I really don't see any reason why you couldn't. I'm not sure what you mean by you wouldn't be able to take the roll. If it's not being filled, that's more of a broker question than a Chris question. Go ahead, Joe. What's next? So if we want to get into MP today, should we go in at the same strike and expiration that you're rolling into? Okay. Loaded question here for me. This may not be for other YouTubers, but for me, I would say first, if it was not part of your plan to get in today, you're not going to get an answer out of me that says, yeah, go buy it today. That's not how I work. How we work at Ovtlyr is we want you to develop your own plans and go with those. Now, some people's plans, which I don't like, is I'm just going to copy Chris all year. I don't want you to do that. I really don't want you to do that. I want you to follow your plan just like I'm following my plan. If your plan happens to be identical to mine, sure, but don't copy Chris blindly. Okay, understand what you're trading and then go at that. So my answer is, if you're going to get into MP today at the same strike and expiration that you're rolling into, my only answer is that's my trade that I have on right now. You do you. It's probably not the answer you want me to say, but it's just the truth. I've already booked enough profits. I'm not stressed on it. But if tomorrow, if MP comes back down, guess who's going to get blamed, Joe?
Yep.
Just saying. Your trading rules seem easy to follow. The magic is in picking the right sector and the right stocks. Can you go over your technique for finding stocks more? I noticed you used Ape Wisdom to help. So I actually use Ape Wisdom almost as like a joke. Ape Wisdom is Wall Street Bets. And it just all it's doing is it's showing the stocks that have the most active stuff going on. I never trade that, literally never. The way that I find trades is by following the exact PowerPoint that is listed down below. I would recommend you go click it, you download it, you study it, and you understand why Chris is picking these trades. In a nutshell, the objective is to find the greediest stock in the greediest sector when the market is getting more greedy. If any one of those things is not true, I'm not interested. Okay. Does that make sense?
Yeah, and I would also say the video that we did yesterday for the U.S. Investing Championship, we really went into the stock screener, filtering, making sure that your settings were going to match so that you came up with the same stocks if you're going to paper trade Chris's plan. So look for the December 13th edition. I think it's USIC004 if you're in the training channel. So it's a good video. Go check it out.
I don't know what it is, Joe. I have made 2,500 videos at this point. I've said a lot of stuff on the internet. I don't remember 94% of it. I can't even do math half the time. So it is what it is. Joe's
Apparently.
camera can't focus either.
That's right. Come on, camera.
So Joe's so drunk that his camera has gone drunk. That's what's happening right now.
In the YouTube channel Outlier Trading with Joe, you'll find a playlist called USIC, United States Investing Championship, and all of Chris's trades so far for this championship have been logged there. They've all been cataloged, and so you'll be able to see exactly step by step how he did every single trade.
Look at Joe. Joe is on top of it. This is a fantastic channel. I am going to subscribe on my dummy account.
There you go.
You guys should go subscribe as well.
So you can see that video right there is the one at the top left, USIC04.
This one with the monkey and two handsome guys.
That's it.
That sounds like a good one. I wonder what's in store in there.
All right.
What's next?
When you measure rolling points from your original entry, do you use ATR at time of entry or current ATR?
You can measure it from whatever you choose to. But when I set up my trade, this is my first rolling point. This is my second. This is my third. Now, this is not in the back tested data, right? This is one of those ninja hacks that actually improves this because we're removing risk off the table. All of this is based on a stock trade, which you can't roll, obviously. Now, adding rolls into this reduces risk, keeps the trade alive, and puts more capital in your account right away. And like we talked about just a minute ago, Joe, what do you do with that capital? You can go invest in something else. I just invested back into SPXL, right? That is the reason we do what we do. Make sense?
Yep, makes sense. Do you roll for the lowest or highest credit?
I don't care about lowest or highest. I care about liquidity. Now, let's go over to MP. And you saw my logic going through this, right? It's okay. I can't do that one. I can't do that one. This one has a lot of liquidity. Not that one. This is potential. And then looking at this one, I could have rolled here or here, right? I could have rolled to either the 63 or the 65. Had I rolled to the 65, that would have actually given me more credit, but less deltas. But now I got that in my back pocket. Be like, hey, you know what? I rolled to the 63. If things continue to work, now I still got the 65 available. So instead of jumping all the way from 63 to 65, I can now jump from A to B and take that route on the way. That makes sense? But it's really
but after you've picked your strike and you're putting in the order and the order doesn't take, because I think you were trying to get it for 215. You dropped it from 215 down to like 208 to try to get it to fill. In that case, the answer to this question would be you go for the highest credit.
Well, I mean, you're trying to get filled, right? You can put whatever credit you want in there. You could put $37. You ain't gonna get filled, right? You got to go where the market is. And sometimes, you need to bring down your credit or bring up your debit if you're buying the option in order to get filled. It's a fantastic story in this book right here. By the way, Joe, did you see this morning? Did you see
Yeah,
this?
that was
Oh my
moving.
gosh. What's this? Forgive me. I can't remember his name off the top of my head. Woodsmansey.
Keenan.
Keenan, that's right. Sent me this flag that was flown on a B-2 bomber over Korea. And so I'm going to get my Boy Scouts to help me fold this up into one of those triangle flag holders tonight. I just thought this was the coolest thing. I was beyond grateful for that. That meant a lot to me. There's a great story in this book. Keenan. Yes, I know. I got it. Thanks to Joe. Chris can't remember everything off the top of his head. Okay. Chris is a professional YouTuber, but he has no script. How to Make Money in Stocks has a great story about making sure you get filled when you find your trade. And so basically the story is, the narrator of the story, was trying everything that he possibly could to catch turkeys. And the turkeys came in and then turkeys came out, but he wanted to wait for, at least 12 turkeys to come in. But then by the time that he set his trap, there was only one turkey left. So it's like, you can watch your trade come in and then absolutely go without you for a couple nickels, right? For a couple nickels. If you don't want to pay up and then you don't get the trade and it ends up being an amazing winner that you weren't a part of, you only blame yourself.
Yeah, good point. Okay, last one. When I rolled, I closed the original trade and added a new line for the roll. Is there a reason not to do that?
I mean, if that's how you want to keep track of it, Mark, by all means, you do you, my friend. I like to do it this way. And the reason is so I can look over here and it is one trade, right? This is the one trade, the one MP trade. This is not a new trade, so I don't want another line. But also, I can keep track. I'm up 43% on this trade. That's not normal, by the way. I'm up 43% on this trade, and I wouldn't be able to do that if it's across two different lines, right? That would be two different instances. And if you're looking at your results at the end of the year, that's going to show up as a separate trade right here. It's also going to show up in your expectancy, right? Because that first one, maybe you won 30%. And then the second one is 13% to get to the 43. That's going to show two different instances. That's going to skew your win rate because you really didn't earn two different wins. You earned one win. That's going to skew your average win and your average percent return because it really was one trade. That makes sense, Joe?
Yeah, it does.
Okay, cool.
Now for the Plan ETF trade that you did to use up your credit funds.
Yeah.
Why would you not make that a new line? Because it is a new ETF trade.
You know what? I totally could do that. But now I got to commingle between A and B. What I want to do is I want to make sure that I get my calculations correct. Well, I got to make sure my calculations are correct, Joe. I assume that I can add those shares to this quantity here, and then I'll make sure that the weighted average is correct right here because we're setting weighted averages on the selling. I want to make sure I get the weighted averages correct on the buying. I believe if I update that and that it'll work, but I don't want to break it, so I want to make sure that I do it right.
Yeah.
All right, awesome. Joe, this has been great.
Exciting day. This was awesome. Lots of rolls.
Big day. This is what it's like to be a professional investor, right? When things are just clicking, right? When everything just seems so effortless. This is what we wait for. This is why we wait weeks or months at a time so that we find the greediest stocks in the greedy sectors when the market's getting more greedy, and then it just goes. Now, tomorrow, we may not have any trades, right? The SPY pulled back 50 basis. The SPY crashed to levels not seen since Monday. I mean, huge sell-off today. Not really. It recovered actually really strong. And listen, little pro tip right here. If you see candles like this, where it has a big wick down and itty-bitty baby body up here, that is bullish. That's called a hammer candle. I don't do much in candles, but just think of it logically. Sellers came in and they sold off as hard as they could, but they were overwhelmed by buyers. And that right there, thank you, Rick. That right there
pro tip
is a pro tip.
Pro tip.
Pro tip: if you see buyers come in and overwhelm the sellers and push price almost back to where it started from, there you go. There you go. Hey, Dave says he's fired up for the rest of the year. This is fantastic, but boring. Exactly.
Yeah.
Exactly.
And
If it's
I can
exciting, you're
tell
doing it wrong.
I can tell from some of the questions that we have a lot of new folks in, which is
Thank goodness.
fantastic. Definitely take advantage of the training chat channel on Discord because you're going to have a chance to put in some questions in there, and lots of folks are willing to answer. And definitely check out the videos in the Outlier Training with Joe channel because Chris answers the same questions quite often, but sometimes he does it in a little different way, and you kind of sometimes it'll just click, you know. So take advantage of those resources.
Yeah, and I mean, I've been doing this for 17 years at this point. So I've seen the same question 100 times over. I've changed my plan 100 times over to make sure that in different instances that have happened, every rule that's in my trading plan came from one of those oh crap moments. I didn't account for that. And so that's why the plan is what it is. And you can access the plan down below for free. So Joe, thanks for hanging out with me today, man. I really appreciate you. And I appreciate all the outliers. And Joe, if somebody were looking to save time, make money, and start winning with less risk, what do you think they should do?
Subscribe to Outlier for 82 cents a day, and then check out one of these videos to learn more.
That's a great idea. I will recommend you click one of those. Don't forget the trading room live streams will be at random times. I don't really know when the next 2 days, but I will not let you down. I will talk to you soon.